What if a single crypto token could unlock the power of gold, silver, and gems right in your wallet, or turn out to be the biggest scam of the year? Today, we're exposing the truth behind VWA, the so-called orange bullseye that's aiming straight at your portfolio. Welcome to Generational Wealth, your pathway from knowledge to legacy. In this 8-minute deep dive, we'll uncover VWA's origins, tech, tokenomics, and whether it's a path to riches or a road to ruin. If you're chasing generational wealth in crypto, you won't want to miss this. Let's dive in. Before we jump in, I want to give a huge thank you to our Insiders Club member Roger for requesting this deep dive. Roger, your input is what keeps this community thriving. We appreciate you suggesting VWA, and we're excited to break it down for everyone. If you're not part of the Insiders Club yet, check the link in the description to join and get exclusive perks, like access to exclusive videos and personalized knowledge. So, what exactly is VWA? At its core, VWA stands for Vanguard, a cryptocurrency project that aims to bridge the gap between traditional precious assets and the digital world of blockchain. The token claims to tokenize real-world assets like gold, silver, and gemstones, making them accessible for fractional ownership and seamless trading. Imagine owning a piece of a gold bar without ever having to store it yourself. That's the pitch. According to available project descriptions, VWA is built primarily on the Solana blockchain, known for its high speed and low transaction fees, though there's also mention of an XRP ledger version. The idea is to transform physical precious assets into digital tokens, allowing investors to buy, sell, and hold them in their crypto wallets. This fits perfectly into the growing real-world asset trend in crypto, where real estate, commodities, and art are being digitized to unlock liquidity and democratize access. However, here's where things get interesting and a bit murky. There appear to be multiple tokens using the VWA ticker across different chains, like Solana and Base. Some versions claim backing from big names like Ripple or the traditional finance giant Vanguard Group, but there's no verified evidence of any partnerships. The project's website, VWA.to, promotes it as a way to invest in precious markets digitally, but details on actual asset storage, audits, or legal compliance are scarce. In essence, VWA positions itself as a generational wealth play by combining the stability of precious metals with the innovation of crypto. But as we'll see, the reality might not match the hype. Let's talk history. VWA emerged in early 2025 amid the ongoing crypto bull market, with its launch on Solana around February or March. It quickly gained traction in October 2025, when it surged to an all-time high of about 2.3 cents, driven by social media buzz and meme-style marketing. Posts on platforms like X hyped it as a utility token with real-world backing, attracting over 32,000 holders at one point. The backstory claims inspiration from traditional asset management, with the name Vanguard evoking the famous investment firm. However, we can't find an official connection. It's more of a branding choice to imply reliability. Early marketing focused on real-world assets as the next big thing in crypto, especially with the rise of tokenized assets in DeFi. But from the start, skepticism arose due to unverified claims of Ripple integration and a lack of white paper or roadmap updates. By November 2025, it's trading on decentralized exchanges like Jupiter and PumpSwap, but not on major centralized ones like Coinbase or Binance. Technologically, VWA leverages Solana's ecosystem for its operations. Solana's proof-of-history consensus allows for fast, cheap transactions, ideal for trading tokenized assets. The process supposedly works like this. Physical assets are acquired, vaulted securely, and then represented by VWA tokens on the chain. Holders can then trade these tokens, redeem for physical assets in theory, or use them in DeFi protocols. But here's the catch. There's little to no proof that any actual assets exist. No independent audits, no photos of vaults, and no legal frameworks detailed. If it were legitimate, it would involve oracles for price feeds, smart contracts for redemption, and compliance with regulations like KYC for asset claims. Instead, it seems more like a standard ERC-20 style token with hype around real-world assets. For comparison, established real-world asset projects like Pax Gold have verifiable backing. VWA does not. Now, tokenomics. VWA has a total supply of around 1 billion tokens, with most in circulation. There's no clear breakdown of allocation. No mentions of team tokens, marketing funds, or burns. Wallet analysis shows high concentration in a few addresses, which is a classic sign of potential manipulation. As of November 11, 2025, the price hovers around 0.006 to 0.009 cents, depending on the exchange, with a market cap of $7 to $10 million. 24-hour trading volume is modest, around $400 to $500,000, mostly on DEX. It's down from its all-time high of 2.3 cents, but has shown pumps of 20% plus in single days. The total supply is around 1 billion. The circulating supply is around 1 billion. The current price is 0.007 cents approximately as of recording of this video. The current market cap is $6 to $10 million as of recording of this video. This setup screams volatility, great for short-term traders, but risky for long-term holders. Pros: if VWA delivers on its promises, it could be a game-changer for generational wealth. Tokenized precious metals offer a hedge against inflation, and integration with crypto could provide liquidity and growth potential. In a bull market, real-world assets are hot. Think BlackRock's tokenized funds. Cons and risks. Unfortunately, the cons outweigh the pros. Multiple sources label VWA as a potential scam due to zero transparency, no team bios, no development updates, and unproven claims. Price action looks like a pump and dump. Hype builds, price spikes, insiders sell, leaving bag holders. High wallet concentration means whales can dump anytime. Plus, with no listings on major exchanges, liquidity is low, and rug pull risks are high. Investors should be extremely wary. We can find any evidence that VWA is backed by real assets like it claims. Looking ahead, in the 2025 to 2026 bull cycle, VWA could see more pumps if marketing ramps up or if real-world assets gain mainstream adoption. Some predict it hitting 3 cents to 10 cents if it gets real utility or listings. But without transparency improvements, it's likely to fade. For generational wealth, I'd recommend sticking to established real-world assets like tokenized gold on reputable platforms over speculative tokens like this. My advice? Do your own research thoroughly. If you invest, only use money you can afford to lose, and consider it high-risk speculation, not a safe haven. There you have it, our deep dive on VWA, the orange bullseye crypto that's equal parts promise and peril. It's a reminder that in crypto, due diligence is key to building true generational wealth. What do you think? Scam or sleeper hit? Drop your thoughts in the comments. If you enjoyed this, smash that like button, subscribe for more deep dives, and for trending topics and actionable crypto insights, join our Insiders Club on our website at GenerationalWealth.biz. For the rest of the year, we're offering new members access for only $3 per month. Thanks again to Roger, and we'll see you in the next video. Stay wealthy. Quick disclaimer: I'm not a licensed financial advisor. This is for educational purposes only, and not financial or investment advice. These are the findings of my research and do not constitute facts. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.